Welcome to Big Valley, and I'm your host, Maroema Chingura. So today I'm going to look at the pre-market analysis as usual, and we'll be taking you through the preparation of what I'll be expecting or the things that I'll begin planning for the week ahead, the week that's going to start from 30 November to the 4th of December. So without wasting much of our time, let's get straight into our analysis. We're going to start with the Euro USD as usual. As before, if you haven't yet checked, you can refer to the monthly analysis from the video that's going to come in that will come with the link that will be above. I encourage you that you check it out if you haven't already done so that you can see what we're expecting during this month of November. And the monthly analysis for December, I'm going to cover it next week because we still have 30 November and you never know what will happen on the 30th of November. So hence we are not going to do the monthly analysis for December today. So now I'm going to start with our weekly. So in the weekly chart, what I'll be expecting, because the price has broken this zone, right? The price has broken this zone and it closed the week above the mother candle, this previous mother candle one, and also it closed above this resistance zone. What I'll be expecting now is a bullish breakout trade, right? So in the coming week, it's either the price is going to come back and retest this zone before going all the way up, right? And in the coming week, what may happen is instead of retesting this and going up, the price will just come and retest this zone. So it may be in the following week that I'll be expecting to take another bullish position, waiting for it to go all the way up to this zone. In terms of the bearish positions, I'm not going to take any bearish positions. Why? Because the establishment of higher highs and higher lows, as you can see, this low is lower than this low, which means that this low now is a higher low where we can be able to take a position and to establish a bullish trend. The other reason why I'm not going to take a bearish trend is because of this inside bar morning star combo, this one. So because there is a morning star here, for me it's a high probability setup for a bullish trade. So I can't take a bearish trade ahead of a higher probability bullish setup. Then on the daily chart, what I'm expecting is that since the price is closed above the resistance zone, just as the weekly, we'll be expecting a pullback. The price will pull back and retest this zone, and if it closes above 1.18659, then I'll be taking my bullish position and hold them all the way up to the next resistance zone. Alternatively, the price may just shoot straight up, but I'm not, if it does that, I will only wait for the pullbacks before I buy again. Again, I'm not going to trade or bearish setups. Why? Because as you can see, there is a trend line that has been formed, and we have this first touch, right, this second touch, and this third touch. So according to me, this is, and according to the rules of the trend line, this trend line has been well established, right? So I cannot get into a bearish trade. Number one, because there is this trend line, and then secondly, there is an emerging bullish breakout. So this support shows me that I cannot enter into bearish trades according to the way that I trade. So using the trend line, what I'll be expecting is that the price will then pull back, right, and retest this trend line support zone and also the newly established support zone. And if it holds, then it will move all the way up until the next zone. So ladies and gentlemen, these are the things that I'll be preparing for. This is my game plan for the upcoming week. It may be different from yours, it's fine, because we have different set of rules, but the most important thing is for you to have something that mimics this preparation, so that at the end of the day you'll be able to prepare for the trades that might come. And if it doesn't come according to your preparation, there's no need for you to open that trade. Now that leaves me to say thank you very much for joining me, and I prepared the review, and I also hope you're going to enjoy it. You're going to learn from it mostly. You can click in the link above. Then before I go, I've noticed something that I had left out. So as we can see, we also have a inverted head and shoulder pattern. So this inverted head and shoulder pattern is also evidence enough for us not to enter into any bearish trade. It's giving support to the bullish trades, because the price is broken above the resistance zone, right, and also above the neckline. We can't risk taking short positions because they will be less probable. So what you can establish is that I've got three support for the bullish positions. Number one, I have the breakout. Then number two, I have the trend set up. Then number three, I have the inverted head and shoulder pattern. So which means that I've got three structures that are confirming that bullish positions will be more probable. We have a higher probability than the bearish positions. So in terms of the things that I look at, there is no reason absolutely for me to enter into any bearish trade. If it happens, it happens, but I'm not going to take it. So thank you very much, ladies and gentlemen, for joining me. Please click the link above so that you can watch the trade review session, and also so that you can watch the upcoming USD's trade preparation, the USD's preparation. I hope you have enjoyed uh, this brief presentation of how I'll be preparing for or I'll begin planning my trades for next week. So thank you very much, guys. Roy Machingora out.